Hey guys, good afternoon and welcome to the CNBC TV18 Mumbai newsroom. I'm Pavitra. With me is Ekta, and we have a lot of queries to get to. But before that, if you can just take a look at the market, we've seen an over 100-point kind of drop on the index. Even, the mid-cap and small-cap index are not being able to hold on today. So the mid-cap index is down 200 points from the highs. And across the board, you've seen a pullback come through. Even the IT index, which is sort of really supporting us this morning, has moved to the low point of the day. There are very, very few pockets which are holding up in the green right now. Names like pharma, some of the FMCG names and some of the gas stocks doing well. But across the board, Ekta, there is definitely some weakness which has come through.
Hi, Pavitra. Yes, absolutely. But it is a market which is very lively in terms of deals, in terms of large trades. And like you can see, there is news with regards to InSwift Laboratories as well. The stock is up around 20% on the back of news that the company is selling its API as well as CRAMS business on a going concern basis to Synthimed Labs Private Limited. So it's a private company that's buying it at a total enterprise value of around 1,650 odd crores. The equity value of the transaction for the company is around 850 crores, considering an approximate debt of around 800 crores. So these are a couple of details that we are picking up at this point in time. As you can see, the stock is reacting very handsomely to this piece of news. It's up around 20-odd%. We'll get to more details on that, but as of now, let's in fact introduce our guest for this afternoon, Shaina Mukaddam, who's an independent market expert, Rajat Bose, who's our technical guru on the show. Shaina as well as Rajat, welcome to the show. Shaina, before we start answering a lot of the queries that we have, just wanted your quick thoughts on InSwift Labs and whether you've looked at it as a stock and the news that they're selling their API business for an enterprise value of 1,650 crores.
Well, what I find is that, pharmaceutical business, if you're investing, you should be invested for the longer term. And companies like InSwift and even Strides, they are continuously, selling their plants, putting in more capex. So, as a broad theory, I would avoid investing in such stocks. Trading maybe, because when they sell, they get some money, but you never know where the money is going to be used and whether it's going to come back to the shareholders. So I would avoid these small cap companies.
Okay, all right. You would avoid these small cap companies. Rajat, anything that stands out for you when it comes to these pharmaceutical companies and InSwift Labs, if you've looked at the technicals?
Well, good afternoon, Ekta. Thank you for having me. I would pharma is a big basket. Say, I personally hold Divi's Labs and I love that stock. But let me discuss InSwift Labs, because you are discussing, and China has already said that it's a mid-cap company, a small-cap company. So the point is that this stock has been rising from 60 levels, say early, when the bull run began in April. And it has already doubled, and it is now currently ruling at, say, 123.40. I would suggest, if I were an investor in this and already holding the stock, I would definitely sell. If you look at it, there was a high around these levels, and that was in July 2021, when it touched a high of 116, and today it is clocking 123. So a saucer pattern that was operating, that has already been complete. And from its 9-week moving average, it is almost, say, 70% higher, the current rate. So if any investor is holding, other than the promoters and all, any investor is holding this stock, a small investor, medium-term investor, should get out of this position. Book your profits, get out.
All right, that is the view on InSwift Labs. But with that, let's also move on and get in all of our queries. We have Yashwant, who writes in to us from Thane. He holds 600 shares of HDFC Bank. He bought this at 14.95. He has 100 shares of Indian Bank at 390 and also 100 shares of Bank of Maharashtra at 33. So a whole host of banking stocks, of course, varying across market caps. He says he's a long-term investor and wants to know the future prospects of all of these investments. Shaina, let me come to you first on this. And, if we can go one by one. HDFC Bank has, underperformed over the past few months at least, and, has really weighed on the Nifty Bank as well. But of course, this is very soon after the merger. How do you look at this from a longer term, kind of perspective? And do you think this is one of those portfolio stocks that you just keep in your basket?
Absolutely, Pavitra. I think this is a portfolio stock, definitely, and it is best in class. So I would suggest that the investor continues to hold HDFC Bank, given that it is now the second largest bank in the overall sector, growing at 16%. If you look at their loan book, 11% deposits, their return on assets is going to improve, will be almost close to 2% 1 year down the line. So I think the investor should continue to hold. Now, if you talk of the other two PSU banks, in my view, PSU banks are more of a medium-term trading calls. Now, of the two, I would be a seller or exit in Maharashtra Bank of Maharashtra. The investor has made good amount of money, and of course, the performance of the stock price is a reflection of the sharp improvement in the numbers, the overall asset quality, their return ratios, their their net NPA has come down to just 2%. So I think all this is now reflected in the stock price. Its price to book is now more than 1.1. So I would be taking my profits off the table for Bank of Maharashtra. Indian Bank, on the other hand, is still slightly more reasonably valued at less than one time price to book. Numbers, of course, there is a lot of scope to improve, but asset quality is improving, and I would continue to hold Indian Bank, but hold it with stop losses.
Okay, all right. Well, let's get to another query now. We have Subramaniam Raman, who writes to us from Chennai. He holds 300 shares of Vedanta, which is bought at 282 rupees. He's a long-term investor, wants to know what to do with his holding and the prospects of the stock, whether he should book his losses or stay invested. Rajat, what would you recommend on Vedanta?
Well, I would say that although for the last couple of sessions, Vedanta has been underperforming, and but unless it falls below 230, I don't think he should be getting out, because it has already come down a lot from 280 kind of levels. So chances are that at least you would see a move towards 255, 60. Around that time, an exit would be better. And generally, what I would say is that these mining and minerals kind of companies, you would better be a long-term investor. Otherwise, you can do short-term trading, nothing in between. So here, at the moment, the prospect of Vedanta going beyond 260, very limited as of now. So if it were to show a rally, then exit. Otherwise, put a stop loss below 230. Definitely get out, because in that case, there will be a big fall.
Okay, got that. Shaina, do you agree with this view on Vedanta? Because this is someone who's a long-term investor. So from that perspective, do you think it makes sense to hold on to this one?
See, I would broadly agree with this view, but at the same time, what I see, if you're a long-term investor in Vedanta, the management has often tried to delist the company. So I don't really see any point in being a long-term investor in Vedanta. Shorter term, yeah, I agree there could be a bounce, because both copper as well as zinc, the prices are moving up, even crude oil. So I think to that extent, it may look better technically in terms of profits. But at the same time, the debt is the big concern for the group. And I don't know when the resolution will come. So as a long-term investor, I wouldn't be invested in Vedanta.
Okay, got that. That is the call coming in on Vedanta on both the technical as well as fundamental side. But with that, let's move on to our next query. This comes in from Nandish Kisan, who's on the line from New Delhi with a query. Nandish, please go ahead, ask us what your query is. And both of our guests are on the line as well, so they will be able to help you out.
Hi. Hello?
Hi, please go ahead. Yes, I am able to hear you. Please go ahead. I hear you have queries in Hindustan Copper and Suzlon.
And Suzlon. Yes, actually I'm holding, for a long-term period. Is it right time to exit, and or should I hold it for some more time?
Okay, could you take us through? Okay, so I hear you bought Hindustan Copper at 92 and you bought Suzlon at 11. Am I right?
11. Yes, that is true.
Okay, and how long are you willing to hold this?
No, actually, everybody is telling that there is a shortage of copper for another 2 years' time. Then, it's better to hold it for with a view of 2 years. Then you can expect at least 300 to 400 rupees. So that's why I'm holding Hindustan Copper, whereas Suzlon, everybody is telling that it's a turnaround story, and also even I believe that it's a turnaround story. Should I hold it or because we don't know, right? Price movement anytime can change. So that's actually I want expert view.
Okay, luckily we have two experts with us. We have Shahina, who's going to take us through the query first. Shahina, what do you think? He's been holding on to both of these for a while, Hindustan Copper as well as Suzlon. But do you think these are good bets to, stay invested in? He is willing to hold on for a longish period.
Actually, Nandish ji has got it stopped. He's really got it bang on. Basically, Suzlon, he's made good money on it. The order book is good. It's a turnaround story. At the same time, I think it's better to hold Suzlon with a stop loss because the balance sheet quality, while it has improved after the rights issue and the restructuring, which happened in 2022. At the same time, there is a negative, reserve still. So to that extent, I think the net worth is, a bit questionable. So to that extent, you have a stop loss, keep a stop loss and hold it because there seems to be some momentum continuing. As far as Hindustan Copper goes, I agree, copper, the prices are moving up. And with China coming back, there are talks that China is coming back into the market in a big way, especially in its real estate business, trying to stabilize it. So I think copper is doing well, and Hindustan Copper has margins of something like 35% plus gross EBITDA margin. So it's a stock that one can continue holding.
Okay, Rajat, what would you recommend on both these holdings? Because Hindustan Copper has not done too badly. It's rallied quite considerably in the past 6 months from around 100 odd rupees, and it's close to its 52-week high, not too far away, which stands at around 174. And similarly, what would you recommend on Suzlon?
See, regarding Hindustan Copper, I would say that he has got a very good purchase out here. Very good position. And even though it has come close to its 52-week high, and there is some selling, as I can see on the daily chart, but the weekly chart, and especially if you look at the monthly chart, Hindustan Copper is showing a possibility that it can actually go much further up. Initial hurdles would be, say, 198, 212, or maybe 250, but it can go further up. For a long-term investor, this is the right time to have entered, or maybe if somebody is planning to do, then that's a very good thing. So after a base building since 2014, and as Jeremy Grantham has noted that there had not been any major investments in the mining and mineral sector all over the world since 2011. So he's also bullish on these kind of stocks or these kind of opportunities, investment opportunities. So I fully attest that it is a good long-term bet. Regarding Suzlon, I prefer not to hazard a guess because I'm not very comfortable with that stock.
Okay, got it. Nandish, I hope that helps you with, your queries on both Hindustan Copper as well as Suzlon. But with that, we do need to get into a short break. There are lots more queries that we still have lined up. So stay with us and we'll get to them once we come back.
Welcome back. Let's get in another query now. We have Deepak Dave, who writes to us from Gandhinagar, Gujarat. He holds 400 shares of Biocon, which he's purchased at 345 rupees per share. And he is a long-term investor, wants to know what to do, whether he should hold or sell this particular counter. He's currently sitting on quite a significant loss when it comes to Biocon. Shaina, over to you on this one. Considering that you do look at the pharmaceutical space, how would you approach Biocon? They've integrated their biosimilar business. Do you think that there's upside from current levels?
No, Ekta actually, while they're integrating that biosimilar business, the acquisition that they made, basically it is affecting their profitability. And as we saw in the last quarter, while turnover has gone up, their profitability is being hit by, the higher debt, so interest costs going up. And also the EBITDA margins, because of certain issues, actually have been under pressure. And also Biocon has actually seen other negatives. In fact, the Malaysia plant has got some observations. So I think all these things put together actually has seen the stock correct a lot last couple of months. Now what I believe is there is some bit of stabilization and some bounce back. But given that it is one of the expensive stocks in the sector for now, I would say that, use this opportunity, use the bounce to exit. So maybe I would keep a stop loss and take my exit at higher levels.
Okay, got that. Rajat, what is your take on Biocon? I mean, of course, this is a stock which is still way off its highs, but in the past few months, there has been a little bit of a pickup. What would you advise someone to do who's looking at this investment from a longer term perspective?
Well, Biocon was falling since 2021 top. And in fact, the top in 2021 was made much earlier than the market top in October. And only at the end of the previous financial year, around late March this year, it posted a bottom around 200. After that, it is rising. Now, certain things from a technical point of view looks a bit encouraging. That is, the 9-week moving average is actually trying to get past the 50-week moving average, which is going to be a bullish signal, and at least a 200-week moving average test around 300 looks quite likely. And in between, there had been huge volume-based buying. So while broadly agreeing with the assessment that Saina gave, I would say that do not exit immediately. You can hold on and put a stop loss below 250. On the upside, see if it were to take out 300. If it does, then there would be more upswing. And if it doesn't, then at that point of time, exit this position.
Okay, all right. So that's on Biocon. Now let's get in another query. We have Keshav who writes to us from Delhi. He holds 60 shares of Coal India, which he's bought at 210. He's a medium-term investor, wants to know what to do with this one, whether he should book his profits or whether he should stay invested. Do you see any further upside technically, Rajat, on Coal India?
Coal India is going great guns, at least in today's session. I see 254 now. In such situations, it's very difficult to say whether, because Coal India, the day it posts a huge run-up, it doesn't follow through. I mean, the follow-through is not that great. Only in the last couple of sessions, it has shown some kind of traction and moving up. So part profit booking is definitely warranted because it's already posting, I think it's 3-week high or a 3-year high or so. So part profit booking might be in order, but keep a stop loss below 225 and carry on with the rest.
Okay, Shaina, what do you think of Coal India? You know, there was an interesting brokerage note as well yesterday on Coal India on how the offtake has increased quite significantly in the April to August period, around 8% higher. And they're saying that it puts the ambiguity around volume growth to rest. Of course, you know, it's also been, there's a lot of focus on this higher power demand that we're seeing. So what do you think about this stock? Because it is not expensive even at these levels.
Yeah, I agree. And fundamentally, things are going in its favor. Coal prices have moved up. Demand is moving up. China has increased its imports of coal. So there, I think international prices also should support. Crude oil prices have moved up. Your gas prices are moving up. So I think all these things support Coal India. Valuations are pretty decent. So one can hold and then, review it after maybe 3 months.
Okay, all right. So that's on Coal India, Shaina, as well as Rajat. Thank you very much for joining in and speaking with us and answering all of those queries. Well, we need to wrap up on the show with the news that the Nifty is down around 67 odd points. But one of the key trends which we need to highlight is definitely the underperformance of the financials. The Bank Nifty at the low point of the day down around 0.5%. That's all the time that we have on the show. But do remember to email us all of your questions. We'll address them with our experts. Stay tuned. Closing bell up next.